Welcome. It's a big week, man. A very big week for the financial markets. But today's live stream, I'm going to break down the truth of things. Some of you might like it, some of you might not like it. Quite frankly, we've got to look at both aspects to it. I know as much as you guys want the parabolic move to the upside, but we do need to break down the logic of what is going on in this mad circus that we call the US economy, the US deficit, and all the things that are surrounding this story of interest rates. We're going into the biggest time in any nation when it comes to how much money can you borrow and at what cost is it going to come to you as a person, individual, or as a business. Today's live stream, I'm going to break down the truth of why maybe the biggest short is going to be coming amongst us. Like, I'm serious. Could we get a repeat of it? So what I'm going to do is break down the logic and explain to you where we are, because there's going to be a ripple effect. You can't have high interest rates. You can't have high inflation and nothing happens. It's like they've redefined the logic of recession. Now, ladies and gentlemen, if you're happy at paying premium and paying expensive for stocks, be my guest. You are merely the exit liquidity. And that's what I believe is happening right now, ladies and gentlemen. All the big boys are like, quickly just sell as much of it as you can, because everyone is just riding the hopes that the AI market is going to sustain the US economy. No, it's not. Remember, this is why they're calling AI as a bubble. The truth of it is when it comes to the slowdown in revenue that we're probably going to be getting with Nvidia. So if you're an Nvidia holder, you might want to stick around for this one, because we've just had some news that China ain't too happy with Nvidia. That's led to Nvidia being down nearly 2% in the pre-market. I mean, it's nearly a $4.5, $5 trillion market cap. That being down 2% ain't exactly a small amount of money that's left the table. We're also going to break down Bitcoin. What's Bitcoin up to? Bitcoin's doing some big things, ladies and gentlemen. And I've said this before. We need a catastrophic event economically for Bitcoin to come through. If it's the alternative for finance, then it needs an event to show that investors believe in it. Otherwise, you've got an ETF that's at all-time highs in terms of holdings, and it's all made up of investors sat from Wall Street. So we need to really understand what we're dealing with. By the time I'm done, you guys should be leaving with a logic that you'll be able to say, you know what, that guy's right. Or, you know what, shut the... Anyways, ladies and gentlemen, let's break it all down. Mad love and respect for passing through. If you are new, make sure you do subscribe. We've got a big week this week. It's FOMC, baby. And I've got the best thumbnail for it. I'm doing all right with these thumbnails. No, I do not need a haircut. Anyways, breaking it all down for you. Let's get back into the business of what's going on right now. A lot of optimism are coming into play regarding the interest rates. Yes, we're getting a rate cut. That is evident from investors' bets right now. As you can see, 96.2% are coming into play. Now, listen, before you all want to know about what price action is doing, wait there. Before all of you care about what price is going to do next, you need to forget about what price is doing and understand what makes price go. Now, we're dealing with a macro-driven environment. Any news about the economy, investors are going to price it. They're not going to price in the logic of expansion to the upside or Bitcoin taking the all-time high because Fibonacci's ratio has just been triggered. This is the after event, okay? We need to understand the why. What's going to make you buy and what's going to make you sell? Now, you got to understand what's going to make the big boys buy and what the big boys are going to sell. If we don't pay attention to the world, one of the world's biggest marketplaces, given that that is the bond market and how that influences everything, then you're going to be left behind. You're just going to be then told, like, hold on a second, why is everything going down and I'm buying at the highest peak? Well, this is where we are right now, 96.2%. Now, this article from Bloomberg goes on to say that investors are trying to toy with the idea as to whether or not the Federal Reserve is going to give us the cuts that everybody wants. It says here, the key question this week is whether the Fed will push back against market wagers. Remember, just because they're betting for it doesn't mean that the guys that are betting for the interest rate cut and the prospect of future rate cuts means that the economy is going to sustain itself because dudes in Wall Street are trying to put money to work Remember, they got pooled funds, hedge funds, you name it. It's all of people's money as well as their own capital, but it's more made up of people's investments going into these funds and they're putting it to the work. So you've got to appreciate this is not a representation of the economy. This is a representation of people's belief that they think that we're getting the rate cut. Well, 96.2% believe we're getting the rate cut. And then when this article goes on to say that there could be a story of whether we do get the full rate cuts this year or next, well, when we look at the bets, they start to paint a different picture. In front of you, 81% expecting that October meeting, we're going to get a rate cut down to 3.754%. That's great news for your mortgages and your credit cards and all of that fun and games. Going into December, because we've only got 2 more meetings for the FOMC this year. 75% are betting that 3.5, 3.75 is going to be the basis. Now, this week, ladies and gentlemen, we've got some interesting data coming out. We got the core retail sales, which will be released before the FOMC. Now, again, if you don't know, the FOMC will be aired at 7 p.m. UK time, 2 p.m. Eastern Standard. But I'll tell you what I'm really waiting for. I'm waiting for the Bank of Japan's press conference. Because for me, regardless of whatever the Federal Reserve is going to say, it's all going to be about what Bank of Japan decide to do. That's going to dictate whether or not investors are going to have to withdraw from borrowing yen and converting it back into dollars to get those dollars out of dollars to go back into yen. Because if Bank of Japan decide to increase their interest rates, we have got a repeat of the 5th of August, 2024 carry trade unwind. But hopefully that's not the case. If they don't cut the rates, that's great news for us. But we do need to understand the impact of what we've got going off right now in terms of the economy. So let me draw your attention to this. In front of you is the US retail sales. Now, take into consideration what I'm going to be talking about right now. Are we going into the biggest short? That means, are the markets going to correct? So let's base it on this logic, okay? In front of you is the US retail sales. The yellow stuff or the yellow bars represent retail sales year on, just the latest readings. And then you've got the blue line, which is the year on year. Year on year is showing that there's a little bit of a slowdown, okay? You can see that retail sales is going up, but why would retail sales continuously be going up right now? We've got tariffs, haven't we? Well, the logic says that if tariffs are coming into play, the cost of goods is naturally going to be increasing, okay? So that means consumers are starting to quickly go and buy whatever they need to buy. Businesses are going to buy whatever they need to buy from their manufacturers. That's why the manufacturing data has been coming in showing that the economy is doing great. And though all they're doing is effectively preparing themselves for the change in what the future looks like, right? So retail sales this week is going to dictate to us where we are. And quite frankly, according to Bloomberg, it doesn't matter what the data is going to suggest. Whether it's good or bad, the market's more interested in the monetary policy, which is the cut in interest rates. Now, let me draw your attention to something else. Industrial production and capacity utilization. What does it all mean, Tino? It's irrelevant. If Bitcoin's printing a vector candle, I don't care. Well, you do need to care because this is going to determine whether or not we are being told a lie about the data when, of course, the CPI is an estimate and it's not the true reading. That's where I keep saying that the data is cooked. In front of you is the industrial production and capacity utilization chart. What does it tell you? Well, let's just break it down just from a visual point of view. Before, anything above is good news. Anything below is bad news, right? But you can see where we are right now. Doesn't look like things are doing too well from this great economy that we've got. Take into consideration that the Fed, or should I say the US, has spent $345 billion this month. That's more than what they earned. Equally, that's 7% of the GDP. That doesn't make sense to me. That means your deficit is running like crazy. Let's go and have a look at the deficit. This deficit has been negative for too long. It's like the subprime mortgage crisis has left a stigma, it's left a scar, and that they cannot sustain themselves. The deficit keeps on going down, right? Or should I say increasing? You're spending more than what you're earning, hence the $345 billion that they spent this month, which makes up 7% of the GDP. Well, hold on. It shows that the economy or the GDP has expanded 3.3%. That's bad news when you're earning less than what you're spending. It means that for every dollar that the US earns, it owes nearly 125, 127% on top. That's where it starts to get a little bit tricky, ladies and gentlemen, because when you owe so much money, it means that you need to start generating more. So what does the government do? Treasury issuance, ladies and gents. That's what it's all about. This is how the US government makes its money. It comes up to you and says, ladies and gentlemen, look, I've got lots of debt that I really need to manage, and I need your money to put to work. But what I'll do is I'll give you this interest rate, and that's how much money you're going to earn from giving me money so I can put it to work. From this chart, it seems like we're starting to see some issuance coming into play. Now, if we just go back to a time when a nation was offering bonds, right? Kind of gets investors scared. Not so long ago, Bank of Japan was on the hype, and it was issuing these bonds, long-term dated bonds, continuously flushing out the market, saying, look, take it, take it, take it. And investors got a little bit concerned about that. Imagine if a nation is offering bonds continuously, it means something's not working. Why are you giving out all these bonds? Because when you give someone a bond, it means just give me your money, I will give you this bond. It's like an IOU. If someone keeps on going, here you go, IOU, quickly, you start to think, hold on a second, bro. Wait. Why are you giving me so many IOUs? You clearly not got the game working. Something's going off. And that's what the story was with Bank of Japan not so long ago. They were aggressive with their issuance of bonds. And investors started to scale back a bit and think, hold on, you're offering all these bonds. Naturally, when you offer bonds, it's on the premise that people will consume them. But what was going on with Bank of Japan was they were issuing these bonds and the yields were shooting up. And the yields were going up above that 1.6% region. That's no good for the Bank of Japan. Maybe that logic's coming into play with the US right now. We just quickly go and have a look at where we are with everything. You can see, NASDAQ's making a nice little pullback right there. But I want to show you where we are with the rates of the bonds in the US. Right now, the 10-year bond market is stabilizing at 101. Happy days. The 2-year yield is minus 0.8%. The 5-year yield is coming in at 0.9% negative, which in essence, we're getting a little bit of an inversion going into play soon. Then the 10-year yield is currently trading at 4%. And then you've got the 30-year tapping that 4.6 region, which is down 0.41%. But why is the issuance of bonds a problem? Because it means that investors can effectively see it that the Fed is starting to struggle. Should I say the US government is starting to struggle with its finances. Remember, they spent more than they earned this month, and it was more than about 7% of the GDP. That is a problem across the board. Now, if you're offering bonds, because remember, the bond issuance tells you that the government is struggling, it wants to raise capital. So if you're offering the bonds, are they being consumed? Well, no, because your reverse repos at 17 billion. Again, this has to be in the trillions. This is Wall Street savings account. So what are investors doing? Where are they parking their money? Well, if we just go have a look at other individual participants, you can see investors are going over into the euro. The euro's on a little bit of a nice run to the upside. You can see investors are going into the yen because the yen is on a little bit of a move to the upside. You can see investors are going over to the dearly beloved gold, but gold is going to be consolidating, not going to be doing too much until FOMC. Why? Because comments like this, where they work out whether or not they're going to get the cuts this year or next, is going to dictate whether gold is going to make a move to the upside. So what chart is going to represent that the economy is in a little bit of a problem? This one right here, ladies and gentlemen, the copper gold ratio. What does it tell you? To simplify it, when the blue line's going down, it means that economy isn't moving. Remember what we said about the industrial productivity. It's not really moving now, is it? Well, copper, what do you need copper for? You need copper for everything. So if this is showing a contraction against gold, it means that economic activity isn't really sustaining itself. It's not doing well. How does that make sense with the S&P going up? Because smart money is selling into you. That's the truth of it. When you take the logic of bid and offer, people buy at discount, they sell at premium. They don't sell when it's dropping. That's what the weak hands do. The copper gold ratio chart is giving us the idea that maybe the economy is struggling, all right? Because investors are going into the safety of gold. When you go into a safe haven, it's because you're concerned about something, all right? So when we add up all the story, we've got retail sales maybe slowing down. As you can see, it is. Then we go into the industrial production. That's slowing down. It is. But when you're earning more, or you're earning less than what you're actually spending, it kind of tells you that there is a problem. Then you've got issuance of debt coming into play. So that's another story that we've got a problem with. So that logic then tells you that copper gold ratio historically tells you that there is a problem in the economy. So why the hell is the stock market at all-time highs? Well, it could be to do with this chart right here, which is a smart money, dumb money chart. Now, it does show you a little bit of an off read right now, because when the stock market's going up, this blue line should be going higher. But it shows you that investors are a little bit all over the place with things. They're at a medium here. Smart money's just stuck there. Dumb money's all the way up there, but dumb money is, of course, buying into it. Or where is it? Hold on, where's the NASDAQ? Here we go. NASDAQ, it's just sailing to the upside. And what makes it even better for us to justify the idea that this bull run is just being sustained is because of the volume. Now, when we go and have a look at the volume of NASDAQ, we can then see clearly that on the weekly from last week, NASDAQ finished really good on volume above average. But is this a climatic candle? What do I think is going to happen? Well, ladies and gentlemen, the only thing that's been leading the marketplace to the upside is the stock market in terms of the tech market, all right? Nvidia has been the star of the show. But then when you see articles like this, kind of makes things a little bit concerning. It says here that China says that Nvidia has violated anti-monopoly laws after conducting a preliminary probe. Now, Nvidia has gapped down into the open itself. So if we just quickly go over look at Nvidia, you can see that Nvidia's price right now has gone down moved up from 172 all the way up to around about 175 right now. So that's not really great news for Nvidia. But according to this, says here that with this probe and the fact that China is just going to drop onto Nvidia means that their next quarterly results are going to show a reduction of revenue between $2 and $5 billion. That's no good for the investor because he knows now that the revenue is lower. That means there's a contraction. And what makes it even worse about it is if you go and look at this, look at the reliance of Nvidia on revenue from China. You've got the US up here at 60 billion, and then you've got Taiwan at 60 billion again, and then you've got China at 45 billion, courtesy of my guy, Yai Einhorn, whatever, okay? But you can see the revenue is really important from China. So, if the financial markets crashed because of the lack of discipline in terms of lending back in the day at 2007, 2008 subprime mortgage crisis, and you've got Nvidia with this massive market cap, and it's the leader when it comes to AI. Well, if business is going to slow down in Nvidia, what do you think else is going to slow down? Everything else. That could be the reason why the markets are going to get ready to turn. I believe the tech market is going to be the culprit to send everything down because we need a contraction. Looking at everything over here, even with regards to the Fed, they're not getting the liquidity into it. So no one's investing in the US bonds, all right? Now, the only reason why the bonds market is going up right now is because of what? Where is it? Here we go. It's because they're cutting the interest rate, so naturally the yield on the dollar is going to be less. But you've got a deficit that's growing. You're doing treasury issuance. No one's interested in the reverse repo. So what does that tell you? Lack of faith. Not to forget that Donald Trump's kicking this ass of this Lisa Cook, and he's adamant he wants her to go. So what does that leave investors to do? Well, ladies and gentlemen, quite simply, go to crypto. Because that's the idea. The idea is you want to come away from the conventional wisdom of traditional finance when historically we know that when it hits the fan, this is a sign that the economy is not doing what it should be. It's clear as day. Now, how many more metrics do you need to validate the idea that the economy is not doing great? Just look at your inflation, look at your labor market. But still, the US hasn't had a recession. The US hasn't been able to reset from its economic expansion from back in 2020. It needs to reset. But don't worry, ladies and gentlemen, it's different this time. It's quite concerning. You're going into an FOMC meeting with the rate cut, and everything is at all-time highs. Historically, when the Fed pivots, so does the marketplace because money needs to be moved to other assets. Speaking of which, cryptocurrency right now is doing some wonderful things. We've got this hyper-liquid Bitcoin well depositing nearly 1,776 Bitcoin. and it's got people are kind of concerned about things. We just go over to price action on Bitcoin and have a look at where we are. Currently stalling around the 114,854. Solana's been the star of the show over the previous week. It's just not stopped going up, but of course that's down to the idea of the treasury with Solana. And then Ethereum, okay, we got this little bit of a retrace. Ethereum usually corrects quite aggressively as well. Back into vectors, and it's currently holding inside of Friday's range itself. Going over into this nut job over here, XRP, still the same price as it was when we had you know what, during every financial crash or whatever catastrophic event will happen, XRP will probably move 50 cents either way. I think that is the perfect stable coin, but we're not going to waste time talking about it, but talk about the idea that this price prediction over here of XRP, if the ETF is approved, has got my attention. $8 to $12. That's something reasonable. No, it's not interested in it because it's just hype. Now we start talking about interesting things. 3.3 billion in weekly inflows into the ETF story. Going over into that, you can see here that we have got an all-time high, currently sat at 759,635,000 ETF, Bitcoin ETF sat in there. This is where your Bitcoin is going, ladies and gentlemen. Just be very mindful of that. That's where your supply is going. So when someone says buy it, buy it. But the problem that we've got is this, ladies and gentlemen, when we get the actual rate cuts, it's a change in the way money is going to be moved. What we need to see happening is people that have been believing the idea of Bitcoin as the future or the hedge or the store of value, that balance needs to stay the same or more. Because we can't have participants that are going into the Bitcoin ETF acting as Wall Street players and not have the same mentality as cryptocurrency guys. Why? Because cryptocurrency guys are all about holding the Bitcoin. They will hold, they will hold, they will hold. But when you've got whales like this coming up and getting rid of it, rotating into Ethereum or whatever reason they're doing and buying and selling the Bitcoin, you can see that this is the behavior that's consistent with store of value. That's why you end up seeing Bitcoin holding specific ranges, not really going anywhere, going sideways. And given that we are close, so close towards that previous all-time high, my logic is that the belief is that as we head towards the FOMC, once we do get the rate cut and the direction of where we are going to end up with interest rates, Bitcoin is going to try and claim that all-time high. Then once we get the rate cuts, because remember, rate cuts don't happen overnight, or should I say the impact of, it happens over a period of time. So logic says they will price everything, and if they say on Wednesday that they're going to cut the rates 3 times this year, happy days, everything's going to soar. Gold's going to move up, stock market's going to keep on moving up, and any retraces lower are going to end up seeing prices go to the upside. And as long as we don't have any problems along the way, especially with this Nvidia story, and investors just absorb the idea that they're going to lose out on revenue and what the impact's going to be for them in terms of their earnings per share in later quarters, then hopefully the market can absorb that and then everything just continues to the upside. But when I say to you that when we get the rate cut decision, 25 basis points is what we're looking for. We need 3 cuts this year. If Jerome Powell turns around and says, we're not going to be cutting as aggressively as you expect, and we're going to give you 1 rate cut this year, and then we'll see how things go going into next year, that, ladies and gentlemen, will be just as bad as the market saying, you know what, that is horrible. Deficits are up, treasury issuance, no one's going into the bonds, they're looking for alternatives, money markets are still sat with $7.5 trillion in there trying to work out whether they're going to risk on or not. It's going to be the biggest short of all time. The best case scenario for me is this. Powell turns around and says on Wednesday, here's your rate cut, 25 basis points. Thank you very much. The market pumps. Then afterwards, he turns around and says, ladies and gentlemen, we think right now is the good time to cut even more. How about we give you another rate cut in October, and we'll give you another one in December. That would be the perfect scenario, because what you've got to understand in terms of interest rates, investors want to know what the path is. All right. If the path right now is to cut, how many cuts are we going to get? So they price in the cut. That's why everything's gone up. That's why gold's going up, but gold's consolidating now because we're waiting for the cut, right? So once we know we've got the cut, happy days, everyone's excited. Then we get the next thing. How many cuts are we going to get to? What's the end path? Are we going to go to really low interest rates? How is that possible? Inflation, labor market slowing down, deficits are at all-time highs. Your debt ceiling is just continuously being increased. So what's going to give? And in my opinion, if Powell comes across as dovish, systems go, ladies and gentlemen, shift into the upside. Your Bitcoin will clear the all-time high. Awesome. But if it comes across as hawkish, then all this song and dance about all rate cuts means nothing. You better give us good rate cuts on Wednesday or the prospect of rate cuts this year. Otherwise, the market is going to then take this measly cut that we get and turn it into a Fed pivot. And then that pivot will naturally lead to a corrective move. And that's everything coming down. And we don't want that. We don't. But the story is adding up to the idea that the economy is struggling, but they're painting a different picture about it. Why? If no one's going into the bonds, that is one of the most, it's such a letdown for the US government. It is, because it's showing lack of faith. What's the alternative? Bitcoin. Yes, Bitcoin is the alternative, ladies and gentlemen. We just need everyone on Wall Street to believe the same thing. All right? Cool. What time are we on? 31 minutes past. Quickly break down a little bit of flavor on Bitcoin. What's going on? NASDAQ, what are you doing? Hold on. NASDAQ. NASDAQ's gone. NASDAQ's off. Right, let's quickly break this down for you all. So, open interest on Bitcoin. As you can see, we're still inside of this 113.14 region. Open interest point down here at 111,774. Key area. Next area is all the way up here, 120,000. That's where most of the open interest is currently sat. Now, quickly breaking it down. Oh, NASDAQ, you wonderful thing. No shorts. No one's playing shorts on Bitcoin. As you can see right now, this is the liquidation delta. Where are the players? You got some longs that have been taken inside of this range right here that may have been liquidated or positions that have come in. All right. But you can see that volume is starting to deplete out. NASDAQ, you wonderful thing. Look at this. Look what NASDAQ's doing. NASDAQ is gone. Ladies and gentlemen, if I smell a stop run, it's right here. This is what you call front running. This is on bad news. This is when everything is wrong. This stinks, okay? When it goes up, they sell aggressively. So equally, you're going to see a nice, sharp little reversal. It's going to come into play, so just be careful when you're playing the NASDAQ today. It is Monday, and we're anticipating rate cuts. Hold on. I'm so bearish, I should buy XRP now so that I can feed my Stockholm Syndrome. Harry Potter, I'm so sad that you're in that position, my bro. I really am. You have to buy XRP. That's sad. But look, if NASDAQ's doing this, okay, you can tell something's not right, okay? But this is all for rate cuts. When we get the rate cut, then you're going to see the movement. If you can exploit this, happy days. It's wonderful, okay? But just be careful because NASDAQ stinks and it's notorious for running to the upside to only equally shift it back down, all right? So those of you trading NASDAQ, XRP, those of you trading NASDAQ, just be very careful. Going over into our lovely Bitcoin. I mean, it's not doing much yet, but there is a bit of a rotation with Bitcoin. NASDAQ moves first, Bitcoin holds, then NASDAQ pulls back, Bitcoin goes up. I'm seeing that rotation, especially with crypto overall. Quickly going back into this chart over here, ladies and gentlemen, just to put it into perspective about the delta. We've got lots of players coming inside of this range. So whether this area has been liquidated or not, it tells us that there could be some longs coming into play inside of this range right now, okay? Now, equally, I just want to go over and look at the open positions here. So we've got quite a few open positions above the 115,000 region, and we've got a light positions around the 116,700. Going over into the order flow just to break things down for you. NASDAQ, you stain. You funny asset class. Right, here we go, Bitcoin. So we've seen quite a bit of bids coming into play. So someone came in and said, you know what, I'm happy to buy Bitcoin at 114,600. That's wonderful news right there, okay? But what you understand here is whether or not this bidding zone is going to sustain the rally higher. And that's what Bitcoin needs to do inside of this range. It needs to sustain that the bids here are not coming in because shorts are currently being closed, or whether someone is actually just buying at this point and wanting to buy lower. If you see a concentration of bids coming into play inside of the Coinank and such a large concentration of bids, it could imply that the future shows a short-term rally further to the upside. But look at where we are. Interest rates are going to get cut. That means money is going to be cheaper. So what investors have to do is they need to come away from the dollar because the dollar value is going down because they're not going to get a yield. So they have to go somewhere else. Bitcoin is the alternative. Okay? You've got to be very mindful of that. As long as the NASDAQ keeps on sustaining this move to the upside, then the logic is cryptocurrency is going to follow through and do exactly the same thing. But remember what I said to you guys. Macroeconomic data takes a while to factor in. The copper gold ratio is showing signs that the economy is slowing down, industrial production slowing down, US deficits increasing, and they're spending more than what they are earning. US dollars that are earned, well, they owe 127% on top of that. That's not a sustainable business model. It's a tower of Jenga that's getting ready to drop. So, when it comes to it, ladies and gentlemen, once we get the Fed cut and when we know where we are with everything, if we are getting a dovish approach, that's going to be great news. I believe that once we know the path of where we are with the rate cuts in the future, that would then solidify the idea of the Fed pivot. So from now up until then, maybe the markets are going to keep on shooting higher and higher. You're going to hope that Bitcoin does clear its all-time high from now up until the FOMC, because if it doesn't, things might get a little bit interesting as we get to the Fed meeting and they're not dovish. So, with that being said, I hope that does put things into perspective. Be sure to like and subscribe, and I'll tune into you all later on with some flavor. I've got a surprise for you. Mad love and respect, guys. Peace.